You've solved a problem, but you've not solved it in a way that can transform the industry.
What I'm talking about today is a $400+ billion of an industry.
We are largest exporter of honey from India.
No, we are not profitable yet.
What do you create? What is unique that you've created?
We've already crossed 58 CR of revenue as of last year and aiming more than 100% growth this year as well.
We are one of the world's largest B2B jewelry platform. We have reduced the entire turnaround time or improved the entire cycle time by more than 75% and have reduced the logistics cost also by more than 90%.
Again, look at the depth of the market and decision making. You try doing a B2B sale here. It's next to impossible.
Do investors see as a risk investing in women-owned company?
So we are operating at a 2% PAT and ARR of 500 CR.
In India, investors understand that the unorganized to organized is a play. But what have you done?
With immense discounting, immense ad spend, they're able to achieve bigger volumes than what we are doing in the online segment particularly.
If you look at the apparel business, what is the biggest problem there? Is dead inventory.
We are more interested in your journey. How
Okay.
did you start? Because
I started because... Hi, and welcome to another edition of Startup Table with AJ. AJ being me, Archana Jahagirdar, and I'm the founder and managing partner of Rukam Capital. We're an early stage fund, a VC fund, and we're sitting in the Rukam Capital office, which does this magical turnaround for this table. A lot of times founders ask me that why do I do this? The only reason is because we love founders. We think all founders should get spotlight. Unfortunately, only a few. The unicorn founders, of course, get a lot of spotlight, but you need that support when you're building, when you're just starting out, because the world needs to hear your story. Being a founder is a very lonely journey, and therefore we are trying to bridge that gap a little bit by creating this lovely table so that founders can speak to each other, to us, and to the world at large in a more relaxed, happy sort of environment. So today, in this episode, we've got legacy startups, and the idea about doing legacy businesses was that there's a little bit of friction about why are startups getting all the limelight? Why aren't we? We've been running businesses for a long time. So why don't we get the spotlight? So let's hear it from them and to understand what are their pain points, what is it that they want to talk about. So I'd like each one of you to introduce yourselves and a brief description of your business, starting with you, please.
Thank you, Archana. Thanks for this opportunity. I'm Madhubala Radhakrishnan, founder of mCURA. We specialize in outpatient management. That we get into the hospital, we take over the entire operations. That is including technology, manpower, and as well as the infrastructure. HP and Apple are our partners, and we choose the hospital where the crowd is too much, queue management is heavy for them, and they cannot handle multiple waiting times everywhere. Those are all the problems that we solve, but we just take it as a turnkey project, not as just an app provider. We give entire platform that includes doctor management, patient management, revenue, everything we take care. That's how it is.
Yeah, hi, good morning, Archana. My name is Roopak Garg. I'm an MBA from IIM Calcutta, and what I'm talking about today is a $400+ billion of an industry. So we are one of the world's largest B2B jewelry platform where we try to alleviate all the limitations and blockages currently imbibed within the entire supply chain management. We provide complete end-to-end fulfillment solutions to the jewelry industry, enabling the manufacturers to showcase their products to the entire world and thereby helping out the retailers to work with multiple manufacturers at the same point of time and customizing each and every product at local individual taste and preferences right at their showroom, at their place itself. And we have reduced the entire turnaround time or improved the entire cycle time by more than 75% and have reduced the logistics cost also by more than 90%. Currently serving in India and pretty soon opening up stores in Dubai as well.
Hi Archana, I am Shivansh Gupta, co-founder of Urban Retail. Urban Retail is a full stack warehousing and logistic company operated in 15 states in India. So we are providing a warehousing and logistics for the B2B model, for the B2C model, for the direct fulfillment. And we are doing for brands like Cetaphil, Sebamed, Strix, Viva, Everett, and a lot more. And we are providing end-to-end solution for the operation part, for the processing part, for the procurement part to the brands.
Hi, my name is Vikas, and I'm the founder of Guardians. Guardians is a security and facilities services company. It started in 2022 June. We will officially complete 3 years on 25th of this month. We are currently operational in 6 states and will be expanding our operations in 8 more states in this year. This industry is growing at 9% CAGR, and we have experienced 125% growth. We've already crossed 58 CR of revenue as of last year and aiming more than 100% growth this year as well. Yeah, thank you.
Yeah, hi Archana. I'm Devinder. I'm from Karma Wheelchairs. It's a Taiwanese company. We are branching out from them, and we are we solve the pain points of the elderly of India, because wheelchair is looked down upon in India. Recently, of course, the awareness has come up, but as you grow old, the wheelchair or the mobility is a natural phenomena. Divyang and having the wheelchair need is a separate one. It is always there. So we solve this one, and we are now branching out to make the business more B2C. B2C means we want to create Ola Uber of the wheelchairs, because people with the long-term mobility are less, but the people with short-term mobility means you want to go to a Tirth Yatra, you can walk comfortably near home. So want to go to the Tirth Yatra and XYZ, because the domestic pilgrimage is a large market in India. So we want to make a short-term need wheelchair solutions, B2C model in this. With this we'll talk more. Thank you.
Hi Archana, my name is Akshat Mehta. I'm the partner of Camden Foods LLP. We are a bakery brand operating in 2 states currently, with about 7 locations in Delhi and Gurgaon. I myself am a chef from Lecoulton, London. It's been 10 years I'm in business, and the business is around 25 years old. We are operating in 3 ways. We have a B2B segment wherein we supply products to Pan India. There is a segment of Turkish baklava which we've been doing since 15 years, and we've been selling them to a lot of different HoReCa segments like hotels, restaurants, and other bakery chains. There is a segment of B2C retail wherein we have around 6 locations in Delhi and Gurgaon. The latest one is in DLF Savara. So anything you can probably think of in a bakery, cakes, desserts, we do it all. And then through D2C channels of e-commerce and quick commerce, we're selling our FMCG products pan India.
Hi, my name is Shivansh Gupta. I am co-founder of Honeyman. We are largest exporter of honey from India. My factory is in Ludhiana and my office is in Gurgaon. So we are exporting our honey to 50 countries across the world. 2 years back, we started a brand name Honeyman. In Honeyman, our main motto is to replace sugar with the honey. So we have 2 models. One model is ice cream parlors. The second model is Cafe Honeyman. In ice cream parlor, all our flavors are with honey instead of sugar. And we have some few FMCG products also, like honey, peanut butter. We have personal care products. We have sauces, and everywhere we use honey. Actually, people think bees. I am a beekeeper also. People think bees only produce honey. It's not like that. Bees are producing pollen, propolis, royal jelly, bee venom, bees wax, and these all our products are good to make any kind of food product, and as well as personal care products. And right now we have 20 outlets. We are growing very fast, and 20 outlets we already start, and 20 outlets is in pipeline.
So, welcome to all of you. My first question is, I'm assuming that all of you are PAT positive, profitable. Is that true?
Yes.
What's your PAT?
No, we are not profitable yet.
You're not profitable
Yeah.
yet. What's your
We
PAT?
have 65 lakh rupees of gross profit last year.
So we are operating at a 2% PAT and ARR of 500 CR.
Yeah, as of last year, it's profitable, but it's very marginal. It's less than 1%.
We are not profitable. Our EBITDA is in negative 2%, and PAT is equal to just.
Since it's a old business, we are operating at a 10% PAT.
Oh, nice.
Yeah.
In my case, I am losing money. I'm burning money.
Why is that?
Why money? Because it's a startup. I have 2 companies. One company I'm making money, and Honeyman I'm losing money.
So tell me about the company you're making money. What's the PAT there?
Their PAT is around 16%.
Okay. So the question I have for all of you, I mean, some of you have been in traditional businesses and trying to now build consumer. Why is the need for that? Why not continue with the businesses as they are? I mean, if they're giving you good revenue, good return, why fiddle with that? Why try something new? Yeah, I mean, anybody, I think from this side onwards can start.
Shall I?
Yeah, please.
So probably in jewelry industry, I have been associated with this industry for the past 22 years now. So I have seen this industry from all the three verticals. I have served in retail for plus 9 years. I have been within a manufacturing entity for from 2009 to 2015, and since 2014-15, I've been taking care of the wholesale business, probably more focused into diamond jewelry industry and layered products. So actually, when we say as a startup, from my perspective, it is more of a convenience bundled with tech where you are currently solving a particular problem and handing it to the end users with some sort of convenience bundled into something to provide help to the entire ecosystem. So this is exactly what we are doing over here. See, in our case, this business has been for generations and will always be into picture. So TAM will never be a problem in this industry. The problem is the mindset through which the current stages of the entire procurement system is being doing. Still, this is the only segment in the entire world where we still rely on a face-to-face and hand-holding of a product. So each and every product that is made from a manufacturer can only be seen by a retailer at any given point of time with one person and a face-to-face interaction with him. We are helping the manufacturer digitize their complete sample and inventory. With a real look-alike product, we have specialized cameras, photo equipment, specialized photographers with studded jewelry boxes where we carve those products out and give them a real live look so that the retailers actually get the product exactly in the same way that they would have understood for or seen in the picture. Currently, what this method is being utilized is with the CAD industry, with the CAD designs that these manufacturers post on online. And the retailer have to make a guesswork of what exactly this product would come and look like when it exactly lands to their place. With the help of these technologies that we are currently imbibing the system and helping the manufacturers out with their sample line into real-time photography. We also provide complete 360-degree view of the products. With the help of this, the retailers get to have an exact opportunity to see the product with minute details and get the product in the same things as they have added it for simultaneously. So this was in the manufacturing segment. So we are currently trying to expand their complete marketing base with limiting, you can say, downsizing the cost of dangers currently imbibed within the industry and also helping them out trim on their marketing costs and thereby helping them out reach of the smallest of the retailer place anywhere across India. It could be, you can say, a Gaddiwala small retailer based out in any town area or tier 3, tier 4. We are helping those smaller retailers out. Now, a retailer in our industry, in the retail segment, there are problems that are much more larger, like minimum order quantity, working with multiple manufacturers, getting to know the latest designs, the latest pricing that are coming on a day-to-day basis. And once they have placed the order, there is complete chain of cycles right from supplying the raw materials to the manufacturer in terms of bullion, in terms of diamonds, and then to diamonds with an assorted basket of diamonds into different sieve sizes. He should have profuse knowledge of all these things. Then there is a two envelope movement which involves unorganized Angadiya services, which actually eats up a couple of percentages of their cost. Then when the products are released to the retailer, it gets to be certified hallmark as per the government mandate. So this entire cycle takes more than 60 to 75 days, involves a huge blockage of capital for that particular time, and moreover, a smaller retailer or a smaller mid-segment retailer are only able to work with a handful of manufacturers with say 1, 2 or 3 on the max, and are at the mercy of the local wholesalers who show them very limited number of designs and charge exorbitant prices. So we are trying to uniformize all the processes currently into one single channel with complete end-to-end fulfillment and no movement of raw material, thereby saving lakhs and millions of rupees in terms of the movement itself, and thereby enabling the retailers which superficializing their entire procurement channel system.
Okay. Anybody else wants to answer this? Why? I mean, why did you do this step down entity from the Korean entity?
Yeah, from the Taiwanese.
Taiwanese.
So we are into the process is that the business currently is B2B. 16 years we have spent, and we have covered the length and breadth of India, from Kashmir to Kerala and Assam to Mumbai and all. What I want that the real value in the business lies in B2C. B2C, if I am able to transform the business after this separation, it is just round the corner. Wheelchair is where if you can give the guidance, an orange is an orange, a wheelchair is wheelchair. No, wheelchair is as per the consumer need, what you require. Leg raised up, recline, tilt, a hell lot of functions are there. So if I can make it FMCD, when I started the business, people were not willing to work for me. Oh, wheelchair, NGO chala raha hai kya? Or I came from the corporate world, Philips and GE. So guys used to call me that नेक काम कर रहा है. But I used to really find it hard that it is also a business and they are also consumers. And India has a substantial population of elderly, and with the fertility going down, the population growth rate going down.
Fertility has nothing to do with it. I mean, if somebody can't walk,
The person-
having children doesn't, they're not going to carry the.
True.
Yeah.
True. But the proportion of the old age population rises in the whole population mix, which is what happened with
No,
Japan.
we don't have that problem yet. But the issue
Yes,
in, our,
it is
in our
looming.
case, the issue is that even a small percentage in absolute numbers is a large number.
It's very large.
Yeah.
Very large. Yeah. So over there, I see that if I'm able to directly approach the consumers, the caregivers, in that case, it really becomes a FMCD business, a durable business, a consumer business. And it is where the value lies.
Okay. Why did you decide to?
Actually, I think I love challenge and innovation, and I want something new because in all my product portfolio, it's a many things is the first in the world. Like we are making ice cream, 35 flavors. It's the first in the world where we do innovation. And not ice cream. We have many more products. Like we have personal care range. It's also made with pollen propolis. So I think I think in India, in FMCG sector, many things are missing. Many good products are missing.
But I mean, there are many things that need to be fixed in the world. But why should you fix it? I mean, you've got a running business. So the question specifically is that if you have a business that's already giving you decent revenue and you can see continued growth, why bother starting?
More is challenge because my other business is in autopilot. It's a family-owned business. It's in autopilot. So I love to do something different.
Okay.
This is the main thing.
Okay. Anybody else wants to?
Yeah, I would like to add something. See, my business where I went to is into health tech. We were profitable till 2021. When COVID came, the outpatient department was completely closed, and healthcare took a complete transformation after that. Then after 3-4 years, my clients came back and they tried by themselves. They couldn't do. Then they came back and they said, "We will give you much bigger scope. Why don't you do it?" Health is one segment where legacy is still there and they don't want to change. Bringing a transformation is not so easy in this segment. And bringing technology, the first step that we need to cross is management, then doctor's acceptance, then patient. It's a risk where they don't want to change. They are very, very reluctant about changing anything in the hospital. In that segment, if we are able to do something, and now because of AI is coming in, it's going to be a huge transformation change in the hospitals. And we are going to witness in the next 4-5 years. So for that, we can wait and see how it is going and what is the innovation that we are coming in terms of treatment or in terms of clinical decision or in terms of follow-up. Everything we are trying to do this. So once the industry was something and it is changing suddenly, we need to get that hit. And that hits come to the entrepreneur. We have that guts to do that. Whereas in legacy, we will not have whatever father says, mother says, we have to follow it. As an entrepreneur, we have that leverage and let's take the risk and see where it goes.
Okay. Anybody else wants to respond? Yeah.
Security and facility services is one of the most traditional business. The way everybody looks at this business, was very, very different all this while. But over the last few years, there's been a drastic and a welcome change in the way people
What is
look
the
at
change?
the changes in the mindset of the clients in terms of what they expect from a security guard, which is our brand ambassador and the very product. And we're trying to build an ecosystem where the security guard who's coming from a far off place, in search of a job, we are able to provide him with that basic support, solve all the problems that they are facing on a day-on-day basis, and we are here to offer them a career. Nobody looked at this particular business from a building a career point of view, and that's where we are a little different in terms of offering that career path, right from
What can be the career path?
the security guard, which starts as a guard, in the first year, they can actually scale up to a security officer and also a general manager level based on their talent and performance. um, the segment that we're trying to target, they are mostly the 10th or intermediate pass out people. And if you look at 85% of those people, they are picking up some or the other jobs, but they're not picking up something which can offer them a long term career. And I think that's what we wanted to do. We wanted to offer them a career.
Okay.
Yeah.
Anybody else?
So we started Urban Retail in 2015. So initially we were researching on a project to open a retail store chain. But in 2015, we saw that e-commerce grocery is emerging in India. And the majorly brands are doing distribution through their existing general trade, modern trade partners. So there we find a gap. The brands need not a traditional distribution system. Brands need a fulfillment centers who can scale with them. So we started this distribution for specifically for e-commerce companies, and then later on we expanded to multiple cities, multiple models to scale with brand. Right now we are helping each every problem for the brands related to the operations. So whether it is they need a MIS tech enabled system, they need a reporting system, they require a fast delivery, accuracy, reliability, and all those things. That's why we stick, and still there's a huge potential in the market in these segments. Right now D2C is growing a lot, and every D2C players require a warehousing facility for multiple states to reduce the logistic cost.
Right. Anybody else?
Yeah. So in the last couple of years, the core of the business remains the same, as in providing good quality products to customers around and in the facility where we are operating. So apart from the products, we thought of pivoting into different ways of how we can expand our market. Now, these days, in the era of social media and the era of online boom, so I've particularly felt that a brand needs to have a couple of touch points wherein it is easier for the customers to just get it quickly delivered to their places. So that is when we have realized, and we are selling our products through quick commerce and e-commerce pan India. So this is the way we have been pivoting into different ways of being available pan India, and we're also coming up with a FOCO model wherein we would, by the end of next year, we would at least open 15 more stores in around 5 states.
How many do you have right now?
We have currently 6 stores, 6 outlets. So
All in Delhi NCR.
yeah, all in Delhi NCR. So we have come up with a new model wherein the products can be frozen and be sent to the outlets too far off locations, and would not be a problem operating. And again, we'll have multiple touch points, so that these days more the touch points are there, so it is better for the customers to get that product easily.
Okay.
Yeah.
Okay. So, if I were to ask each one of you, what is that one problem you're facing in sort of scaling your business or seeing it to the point where you think is the potential? Whoever wants to go first can start. Yeah, we'll start with you.
Yeah, if you look at the security business, the main underlying problem is the credit period. The payment that we get from the clients is never in advance. It is always invoice and then collect, which means you have to make the payment upfront, which includes the wages, the indirect costs, the admin costs, and then the statutories. And then you invoice it, and you usually get the payment after 30, 60, or 90 days based on your terms with the client. Now that creates a lot of working capital crunch, for all these kind of businesses. And it's important that you have at least, if not more, 20 to 30% of your revenue as a working capital, just so that if there is any new contract which is coming in, you are able to have those funds at your fingertips, so that you are able to honor those contracts.
Working capital and this thing of payment terms in India is just amazing. Every business suffers from this. You know, this 90-day,
Yeah.
I mean, sometimes it extends to 6 months. I don't understand why doesn't everybody change their cycle and just make it 30 days? It'll be good for all businesses.
Yeah, there was a law recently introduced, you know, the MSME.
Anything.
Yeah. But the ground reality, as you rightly mentioned, is the problem.
Because I think it's such a chronic issue. I don't understand. Each business faces it, but they also inflict it on their vendors. So if everybody was to fix it at one shot, I think it'll work for everyone. Yeah.
Chain reaction sort of.
Yeah, but I'm just wondering what will set off the chain reaction, because somebody who's so powerful that can, change the habit. Because if everybody got their payments in 30 days, this whole working capital issue just sort of melts away unless you're doing something really, capital intensive.
True. This has been, I believe that, working capital issue, this has been our part of the culture, the way India came up as an economy. But it is, changing. We used to operate on, 60-day credit, and India with the surgical, trade, we used to operate on, 60 days, you say, they will start paying after 90 days.
Yeah. And after follow-ups.
So
you need somebody to also follow up.
And then you have to do the careful.
Yeah, exactly. It's a cost, yeah.
Then you have to do the careful, balancing of the relationship.
Yeah.
Should not spoil the relationship because agli baar fir se isi ko bechna hai.
Yeah.
So we have in our wheelchair, business, I have, solved this to a large extent, digitize the whole, channel. All my dealers are, geolocated, geo-connected and digitized.
Yeah, but that still doesn't change human behavior.
No, human behavior, what we are, working on, the wheelchair delivery lead times earlier is to take a longer one. So we have, shortened it to 2 days. Now I'm working on, 4-hour delivery to the trade. The problem which we have is the larger one, is the awareness and the mindset of the India as a country towards disability or wheelchair. Because we see that it is like, go to the Nigam Bodh Ghat.
I can tell you where wheelchairs are really prospering. Airports. Indian airports seems to have the highest usage of wheelchairs.
Wheelchairs, yeah. It is out of convenience of so many people.
Exactly.
Use it. Yeah.
Which is fine. I mean, I think
It's fine.
their
It's fine.
choice.
Absolutely, because you are having inconvenience in some other form. So we are working on the medical fraternity, the doctors. We have made some work in awareness. Like we have a wheelchair which is the standing wheelchair. If somebody is having a spine injury and your legs are immobile, so it will make you stand up and walk around, move around in the home. You go on the road, short trip you can do. These many things the people are not aware of, and creating awareness is a market development job. Requires capital. So we are stuck at that. And my parent company, this Taiwanese are of the view. As such, I used to crack a joke with them that Taiwan is a garage of America. They are very bad at marketing, very good at product. So, which is why once I attempt to make it a consumer business, so for awareness, it needs a very sustained effort, sustained communication. That if you leave, all this world by accident, we will not meet. But if you go naturally, definitely we'll meet somewhere.
Fair enough. Any other problems?
Until last year, we have many hurdles because we was operating from Ludhiana, and Ludhiana is a tier 2 city. वहाँ पर जो talent है वो कई चीज़ों के ऊपर मिलना मुश्किल था. Like if we need a digital marketing team, we need franchise executives. वो वहाँ पर मुश्किल था. But now and our product are also new to many people. क्योंकि लोगों को लगता था कि हनी से ये क्या प्रोडक्ट बना रहे हैं. But now we sort of many problems. Recently, we opened an office in Gurgaon. Now we have a good team, and now our brand is also viral because of digital marketing thing. So I think hurdle is everywhere.
But what is that one big hurdle? अच्छा hurdles तो होते ही हैं. But एक जो बहुत जैसे इन्होंने बोला education, in his case he's saying working capital. एक जो बहुत बड़ा
देखो मैं hurdle के बारे में ये बताऊंगा कि तो मेरा सफर तो स्मॉल टाउन से स्टार्ट हुआ है. लुधियाना में नहीं, लुधियाना से नीचे आके दोरा टाउन आ जाता है जो छोटा विलेज है. अब जहाँ वहाँ पर जब स्टार्टअप स्टार्ट होते हैं तो उनके लिए पहले तो स्टार्टअप का एक शब्द बताना ही मुश्किल हो जाता है. व्हाट इज मीन ऑफ स्टार्टअप. बोलते हैं पागल हो गया तो ये क्या कर रहा है, ये है क्या है, ये तो बच्चों का काम है. पर और वहाँ पर वो टीम भी नहीं मिल पाती. वो टीम और वो आपको आगे कैसे बढ़ना है, इट्स प्रॉब्लम ओवर देयर. तो तो इस प्रॉब्लम को सॉर्ट आउट करने के लिए फिर हमें एक्शन लेना पड़ा। आई लव माई टाउन, मुझे लगा कि यार वहीं पर हमें स्टार्ट करना है, वहीं से हमें आगे बढ़ना है। पर ये चैलेंज, बहुत बड़ा चैलेंज फेस कर रहे थे कि टीम नहीं मिल पा रही, लोगों को समझाना मुश्किल हो रहा है, प्रोडक्ट डेवलपमेंट में मुश्किल आ रही है, और गुड़गांव आने से वो प्रॉब्लम हल हुई है। तो ये मेरे ख्याल में जो भी छोटे टाउन्स हैं, दे आर आल्सो फेसिंग दिस काइंड ऑफ प्रॉब्लम, एंड इट्स अ वेरी बिग प्रॉब्लम।
Yeah, it is.
In our segment, the biggest problem that we are facing is doctors' adoption towards technology. They are very reluctant because when they're writing, they think you can't replace them to technology.
Yeah.
So we are making our tech as a doctor-centric but not doctor-dependent. That's how we are making, and we are slowly bringing hybrid model where a human and the AI can learn this curve and then make a AI model of doctors. That's it.
In our case, the basic problem is working capital. So last year, it's just 3
What
years.
is the working capital cycle?
No, we don't give any sort of credit. The main problem that we face is the requirement of the advance. Say, if there is an order of say 5 lakh rupees from any retailer in terms of jewelry, so basically these retailers do not give 100% in advance. So it is either 20%, 30%.
What is the
50%.
cycle? What is it?
In diamond jewelry, it is roughly 20 to 25 working days. In gold, it is 5 to 7 working.
That's the good.
That's doable, but the scale that we are currently targeting. So last year we raised 1.5 crore rupees, out of which we made a GMV of more than 27 crores. So it was 1800% growth of what we actually achieved. And this is the reason why we are currently trying to raise capital from this current ask. We would be able to scale up to 300 plus of revenue, 300 crore plus of revenue. This is what we are.
I think to scale capital and hire talent is a major hurdle to scale. So in our case, as we are expanding to multiple cities and opening new warehouses, so it require a capital. Also, supplying to all e-commerce company, they are very rigid for their payment terms, whether it is Amazon, whether it is Grofers, whether it is Blinkit. So and same, I'm working with all the brands. Even we are working with pharma brands. They are not giving any credit to us. So working capital is a main challenge for the scale.
Okay.
I believe the biggest hurdle in our industry is immense competition and imitation. You would see multiple bakeries opening up, multiple bakeries on your e-commerce the food delivery platforms with zero capex. They operate from a very remote location, but yeah, they're present everywhere. With one third the operating cost, they are probably available at 10 more locations than we are. So that is one of the biggest problems. Even with a mediocre product, with immense discounting, immense ad spend, they're able to achieve bigger volumes than what we are doing in the online segment particularly. This is the biggest hurdle these days. Secondly, imitation. So the food industry is all about innovation these days. Customers, they want something different, something unique every second day. So once you create something new, once you're inspired by traveling, something you probably would see outside India and would want to bring those things here in the market, it would become viral one day, and the second day it would be available everywhere. Third day the demand is gone. So this thirst of innovation just keeps on growing and growing, but till what extent? Every quarter something or the other thing mutates, and it's all over. The viral thing goes away. Like,
So some of you talked about, this whole talent issue. So how many of you are willing to share in the upside, which basically means ESOPs? So how many of you are looking to really bring in high quality talent and share the upside? So whoever, yeah.
Yes, I'm ready for that. I already planned about
Ready का
that.
मतलब आप बताएं कितना देना है?
अभी कोई डिसाइड नहीं हुआ, क्योंकि मुझे इसके लिए पूरा तकरीबन 10% के आसपास का ऑलरेडी है प्लान।
आपने प्लान करा हुआ है?
मैंने प्लान किया हुआ है, ये ऊपर भी जा सकता है, क्योंकि जिस स्केल पे मैं प्लान कर रहा हूँ वो स्केल बड़ा है, उसके लिए टैलेंट चाहिए, क्योंकि बहुत सारी चीज़ें हम इनोवेट कर रहे हैं, नहीं इनोवेट कर रहे हैं, हमें टैलेंट चाहिए इनोवेशन के ऊपर, जो फैक्ट्री है उसके ऊपर कई नए प्रोडक्ट बन रहे हैं उसके ऊपर, फिर हमें मतलब मार्केट में कैसे लगेगा। वी आर वर्किंग ऑन 5-6 वर्टिकल्स। वन वर्टिकल इज फ्रेंचाइज मॉडल, सेकंड वर्टिकल इज ई-कॉमर्स, थर्ड वर्टिकल इज गिफ्टिंग। अब गिफ्टिंग की मार्केट 2.5 लाख करोड़ की मार्केट है, इट्स अनऑर्गेनाइज्ड मार्केट। वी आर वर्किंग ऑन एक्सपोर्ट्स, वी आर वर्किंग ऑन होरिका, होटल रेस्टोरेंट कैटरिंग। तो जब आप इतने प्रोडक्ट के साथ इतनी वर्किंग कर रहे हो तो यू नीड unit talent for each verticals.
Very cool.
We have already put aside 20%, and I am a strong believer of the fact that success it must be just shared, and a failure must be owned. So 20% already done. I'm willing to do more.
But have you given it out to anybody?
Yes.
How much of the 20% has been allocated?
How much of the 20% is roughly in terms of value you want to know on the
Percentage.
percentage? There are 10 key employees whom I have already just done.
So is 10% already being given or
10% already being given, 10% put aside.
Okay.
Totally up for it, based on the value coming onto the table.
You can't decide the value of table पे आएगी तब मैं ESOP दूंगा. See the
ESOPs will definitely happen, but it will happen once we go public.
no, you can't do ESOPs then. You have to do ESOPs prior.
Mhm.
आपको see आज जो आपकी कंपनी में काम कर रहे हैं will take the company public. So you reward them by promising them today, not when it goes public. वो they get cash it then.
Mhm.
So you have to decide on your ESOP pool now, not later.
Yeah, I mean that is definitely on the cards. It's just that we haven't thought through at what stage
But
we do it.
क्यों नहीं? अगर आपको public जाना है तो there's no way you can do that without a great team.
No, definitely, and I'm always there for the team, and as he rightly mentioned, success needs to be shared, and it will definitely be shared. It's just that we are yet to decide at what stage we do that. Probably too early for us to decide on that, but yes, it is on the cards.
Okay.
So till now we haven't shared anything. So we own the 100% equity. We started very small, and initially we are spending every money very wisely, and we created a processes in our system so that we have not pay more to the employees. But now, as we scaling and expanding and exploring new opportunities, we are very much open for hiring good talents who can scale our businesses, and we thought to share 10% of our equity for the ESOPs.
That's good.
They've already created a pool of 10% ESOP from the entire equity. Unfortunately, while we have been offering that portion of ESOPs to our sales team,
They don't want it.
They
want cash.
They want cash. So, even my sales national head is from Delhi. So I'm paying him roughly more than $1 lakh rupees per month. But still, when we try to offer them to make it in a substantial or a subdivision basis, where we can give them certain part cash and certain part in the terms of the equity, they completely deny it. Might be they are also waiting the company to go to a certain stage, and then probably it makes sense for them. So in our case, the main problem is that we have a team of people who are more of kadhe likha rather than padhe likha. So that might be a major problem.
Right. Yeah.
We do not have an ESOP pool currently. So now with the expansion plan we have made till about last year, we are planning to keep aside around 15% for ESOPs, because I think more skin in the game would, really drive the growth. So
Absolutely.
probably in the coming years we might plan it.
But have you identified anybody in the current team who?
So very recently we are expanded our team, so we have more white collar people in a company now. So definitely we are looking for a CEO position wherein the someone who is better than us, who can grow better than us, who can make the company bigger than what we could even imagine. So I think we are open to do that. Probably by end of this year or next year we might.
So you put the search out already for this position?
Yes.
Okay. But that's a good way to grow, to bring in professional management and then give them skin in the game. So that is a good way to go about it. So, I mean, in India, from what I can understand is most of you have already created and want to give ESOPs. But there's also some resistance from the employees because they don't value it or they don't think they'll get anything. Is that what it is?
Correct. So because they don't want to bank upon us for the growth that they might see or perceive in next 2 years. So it's not people.
But you get it from both sides, huh? If the company becomes big and they don't have ESOPs, then they'll say, "Dekho, hamara ko nahi diya."
Then they will realize the value of that.
But they'll still blame you, is what I'm saying.
See, this bridge between the employer and the employee is never going to be a bed of roses. it will always be
Yes.
This
Well,
happened with us as well. So 2 years back, we were on a fixed salary model. So 2 years back, we shifted some of our sales team to a commission model, so fixed plus incentive. So there was major retaliation from the team that if we do not achieve the sales, and we would not be incentivized because they would have to work more to get more sales. So for
incentive is different from ESOP. See, ESOP is really getting the upside. This incentive, unfortunately, a lot of employers do use incentives to reduce salaries or not give what is due to employees. So there is also, unfortunately, some bad practices. But, a bonus is not the same as ESOP. ESOP is really the upside, when the company really does well.
Yeah, and what I meant by saying is, at what stage it happens is basically, yeah. But the thing is, somebody has to value it the way you want to put it on the
Those are
table.
two different things. Those are two different things. See, first is for you to value your employees. That's number one. That's how you
Definitely.
create the ESOP pool.
Yeah.
Right? Now, whether somebody wants it or not is a separate issue. And the way ESOP is structured, it can flow back to the founder equity. So it's not as if the equity has gone away somewhere else.
No, totally
So
agree.
you can create it at any point, but the earlier you do, you express your intent clearly.
Yes.
It's important to have it so that the employee knows that you're willing to walk the talk. Otherwise, again, in India, unfortunately, employers will promise a lot, but delivery is also very poor when it comes to the employer-employee equation. So if you say, I'll do sometime in the future, so all employers are going to say, what are they thinking? Because they can't read your mind or your intent. You have to show decisive action for them to even consider that you're serious about it.
Completely with you on that.
Yeah.
Yeah.
So, and there's no such thing ki kab karna chahiye. You can do it at the earlier you do it is better because that intent is well expressed to everybody around you. So, you wanted to say something?
My point of view in this is there are different stages in the company. First 3 years, you give ESOP, they don't value it. After 3 years, in the middle, if you tell them, okay, it's this plus this, now they are particular about taking ESOPs, which we are not ready to give because we need to see. And also, if you see the participation in first, it's a product company. I'm running a product company. While you're initiating a product, the team is different. When you're in expansion stage, team is different. When you're in large scale growth stage, the team is different.
That there is a provision for all that. Is you can do a vesting schedule. You don't. The equity doesn't vest from day one, no. So it's also performance, how long the employee, and then that entire new shares that you infuse into the company as you raise more and more. So there are ways in which you can continue to reward the later employees when they come in. It's not to say that it's that first pool is all there is, and you don't have to give away the entire pool. It's also the early believers, to my mind, are extremely important because that's when they don't even know whether you can pay their salary every month. They've taken that risk with you. So they need to be respected for that risk. It's a very big risk they've taken. The guys who come when the company is at a certain point, to my mind, they're not taking as much of a risk because the company has reached somewhere and they know they'll get a job somewhere else. But the guys who come in early, so that they don't even have anything to show for those years then.
But one thing to manage this, what we have done in our company is so far from 2030 till date, not even single day we have missed the salary date.
Oh,
That is the biggest retainer thing that we
but
have got.
again, an employee will know this after they join you. Right? But it's still a risk somebody takes when they come into a new company, which has no track record. It's a big risk for an employee.
Yeah,
Because he or she has to run their households.
So that's the reason we make it a point like
Which is great. I'm not saying you are not paying. I'm saying that the person has still taken a big risk. Because you know you will pay, but they don't know the entire internal workings of your company, right?
Yeah.
So let's say for whatever reason payments get delayed or you lose customers, their first worry is going to be our salaries will get impacted, right? And it does happen also. It's not as if it doesn't happen. So at this point of the table, I of course open it up for questions. If anybody has questions, I'm happy to answer.
Well, we are more interested in your journey. How did you start? Because
I started because, I thought there was a gap in the market. At least this was my perception at that time. So this was before, Y Combinator became active in India. And there was a lot of, and, this was like by this time, enough founders were doing Google search and saying, oh, the minute you go into Y Combinator, it changes your life. And they had this 3 month sort of piece. What I missed in my research was that Y Combinator also gives them money. It's not just 3 months of intensive sort of acceleration program. And the other thing I missed, which I learned very quickly, is that founders are fairly transactional, and as they should be, because time is money, speed is everything when you start a business, right? So they would come and say, okay, look, all this is very well, but where's the money? Are you getting me money? And at that time, the way the regulator was also thinking, they wanted to regulate this private market space completely. So that's how we became a fund. I was actually trying to set up an accelerator, not a fund.
okay,
Yeah.
My question is, in which stage we have to raise the fund? I know it's a subjective, but give me your insight.
देखिए एक जो मैं बात बहुत 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 बार मैंने बोला है कि फंडिंग आप तभी आपको लेना चाहिए अगर आप एक वीसी फंडेबल बिजनेस बना रहे हैं. तो वीसी फंडेबल बिजनेस में एसएमई में और एमएसएमई में बहुत अंतर है. तो अगर आप बहुत सारी चीजें कर रहे हैं और एक और बिजनेस भी है तो आपको नहीं मिलेगा पैसा.
ठीक है.
ठीक है. तो जो स्पेशली जो वीसीज होते हैं उनको चाहिए कि जिसने वो बिजनेस शुरू करा है, वो स्टार्टअप शुरू करा है, बस वही एक चीज करे और कुछ नहीं. और उस स्टार्टअप में भी एक बहुत नैरो सी कोई चीज कर रहा है, मतलब 10 वर्टिकल्स 5 वर्टिकल्स नहीं चल सकते हैं. सो दैट इज अ स्टार्टिंग पॉइंट. दूसरा है कि एक वो ग्रोथ माइंडसेट बहुत जरूरी है. उसका मतलब ये होता है कि अगर एसएमई एमएसएमई क्यों नहीं बढ़ते हैं. एक है वो टैलेंट नहीं लेके आते हैं और फिर उससे फैमिली कंट्रोल करती है, फिर वो एक सर्टेन पॉइंट तक ही करते हैं. और वो कई ऐसे बिजनेस होते हैं वो एक लेवल तक ही ग्रो कर सकते हैं. वो मतलब जितना वीसी को चाहिए उतना नहीं ग्रो कर सकते. तो थोड़ा सा आपको अपने आप से ये सवाल पूछना पड़ेगा कि आपका बिजनेस है जिसके लिए वीसी फंडिंग की जरूरत होनी चाहिए, क्योंकि आपको उसको रिटर्न भी तो देना है.
रिटर्न देना
नहीं, बट वो इतना आसान नहीं होता है, क्योंकि जो इंडियन मार्केट है, हमारा मार्केट बहुत ब्रॉड है बट अभी शैलो है, इतना डीप नहीं जितना अमेरिका है, क्योंकि वी आर स्टिल क्लोजिंग टू $4 ट्रिलियन. अमेरिका इज ऑलमोस्ट $45 ट्रिलियन. तो इतनी ग्रोथ ऑब्वियसली नहीं आ सकती है यहाँ पे. सो देयरफॉर सर्टेन प्रोडक्ट्स एंड सर्टेन बिजनेसेस जहाँ ग्रॉस मार्जिन बहुत ज़्यादा है, सो अगर 70-80% ग्रॉस मार्जिन है, सो देन यू हैव ability to make mistake and spend on that marketing so that you can get customers. अगर आप 50% के मार्जिन पे हैं, ग्रॉस मार्जिन पे हैं, it's harder, क्योंकि आप इतना मार्केटिंग में खर्चेंगे तो फिर आपका कभी पैसे ही नहीं बनेगा. So it depends on what is your sector, and also एक बार ना खुद को टटोलना जरूरी होता है. सबको लगता है कि मुझे मिलनी चाहिए, बट क्यों मिलनी चाहिए? आप में वो एनर्जी, वो ड्राइव, वो रुतबा है जिससे आप वो इतना बड़ा बिजनेस बना सकते हैं. और वो बिजनेस में बहुत सारी अड़चनें हर बिजनेस में आती हैं, तो उनको आप कैसे and सबसे ऑफकोर्स जरूरी है कि कोई कैश पेमेंट नहीं हो सकती है बिजनेस में. सो इंडिया में बहुत लोग अभी भी कैश पेमेंट्स पे ही चलते हैं. तो अगर आपको लगता है, एंड इंडिया में वो क्रिएटिव अकाउंटिंग बहुत चलती है कि भैया थोड़ा सा मैं अपना खर्चा निकाल लूँगा, तो वो सब नहीं कर सकते हो आप. सो अगर आपको वो सब करना है, एंड मैं ये नहीं कह रही हूँ कि गलत है सही है, मैं वो सब नहीं बोल रही, बट आपको अपने आप से ये पूछना पड़ेगा कि वो जो एक सीधी लकीर पे जो चलना पड़ता है जब किसी का और का पैसा लिया जाता है, वो सब आप कर पाओगे कि नहीं कर पाओगे. अब जैसे हमने कुछ बिजनेसेस देखे हैं जहाँ पे कैश में ही कलेक्शन होती है, तो वील नेवर इन्वेस्ट. आई मीन नो वीसी विल एवर इन्वेस्ट, यू नो. तो बहुत सारी चीजें होती हैं जो वीसीज देखते हैं. अब more than stage is one of the thing, not the only thing. Any other question?
How do people generally take up the valuation part of it? It could be a perspective for a different investor equity. So is it usually based upon the GMV, or is it actually based upon the profit margins that are company?
So again, different businesses are looked at differently. So, like I said, one is gross margin is an important factor. So, SaaS businesses are typically valued higher because, again, they have great gross margins and they have subscription sort of. So, your revenue is tied in for almost a year in most good SaaS businesses, right? If your CAC, your customer acquisition cost is very high, then it worries investors because, and then your valuation will get depressed. If it's a commodity business, your valuation will be low. I mean, it'll be hard to get investment, but your valuation will be very low because it's a commodity business. And so barrier to entry is very, very little. So there are several factors. And then, of course, the founder quality matters a lot. So sometimes founders do get a premium because they have demonstrated something that, that makes investors think that they will be successful.
One more question. I'm from US. So I've seen and met VCs there, and I'm meeting VCs here. The mindset of the VCs there towards the entrepreneur are completely different, and what I see here is completely different. And mostly the concentration more in India is towards B2C or D2C, and B2B or SaaS or in Indian market, whoever is doing is not given that kind of importance or kind of, will not say anything, not kind of importance. Why do you think there is this
So
difference?
the difference is also in the founders in US and the founders here. There's difference in the market. So, we can't just cut, copy, paste and say, wahan pe it's like this, so it should be like this over here. It is a function of, no, but think about it, right? There are two sides to this business. There's an investor and there's a founder. So look at the quality of founder and the returns those founders are giving. So obviously, then the investors also think differently, right? They play off each other. It's a symbiotic relationship. I'm not saying one is better or worse, but I'm just responding to your point that VCs are different there, but the founders are also different there, right? And I'll answer the entire question. So, second part to SaaS and to B2B, again, look at the depth of the market and decision making. You try doing a B2B sale here. I mean, it's next to impossible. First of all, a lot of the multinationals who are here, they do not have the freedom to make choices on products. It typically comes from the HQ, right?
Yeah.
Indian businesses are still too small, most of them. They mostly fall into the SME, MSME. So they don't want to buy because, again, they are not looking to grow their businesses so aggressively. So where's your customer? So your total customer size is also limited. So it takes a lot longer. So what do most SaaS founders in India do? They relocate to the US, or US is their main market. Even if they don't relocate, the customers sit there. So obviously, if there's one more friction point to get your customer, which is you have to go to the US, and the US is also a very competitive market, right? So why would an Indian VC sitting here want to fund that? Because then if it succeeds, it really succeeds. But success is not guaranteed because you're then competing in a very, very competitive market. And then what's your
Differentiation.
and why should you win in that market? Because most of the technology innovation is happening there. So then what is it that the Indian company brings to the table? And I'm not saying that they can't or they don't, but I'm just saying that it's an extra layer of friction for an investor to worry about. It's one more very significant risk. That's what I'm saying.
Okay, and do investors see as a risk investing in women-owned company, single women-owned company?
So, look, I can't answer that on behalf of all investors, but are there biases? The answer I would say is yes. So, I wrote a LinkedIn piece and somebody commented saying, oh, investors only invest in companies that they can understand. I said, but that's true for all human beings. So, if most VCs are men, they can only understand men. So, there's also both hidden and subconscious biases that we all have. Even if somebody wants to do better, there is also subconscious bias, right? So there aren't too many women VCs also who are at the decision making level. So there are now people coming at the junior layer, but you need to be at a level where those biases can be overcome. So is there a bias? Data seems to suggest yes. But is there a bias with us? The answer is no. We've backed many solo women founders. So
Thank you.
yeah.
One question, possibly it's related to the topic. Traditional businesses with potential versus new or unique ideas.
So India offers enough transition from the unorganized to organized. So if you look at a lot of the VCs, especially working in the consumer space and us included, we are okay with the unorganized moving to organized, but you have to do something significant that gives you an edge, and that you've changed it from unorganized to organized. So an example in your space, for example, is the number of outlets you're able to run. Can you really run a chain? If you have one outlet, it's not again VC fundable business. It's a traditional business. But can you create a chain, which means you have to have supply chain, your COGS, your manpower, talent, and the kind of talent you will have will be different from what a typical QSR will have, which is typically a mom and pop. In your case, again, because there's such a strong service layer, what do you create? What is unique that you've created that makes it an investable business? That's on you. So in India, investors understand that the unorganized to organized is a play. But what have you done? So again, an example I give very frequently, so I think it's an easier example for people to understand is if you look at the apparel business, what is the biggest problem there? Is dead inventory. Because seasons, so apparel has had this problem. How do you predict inventory? Now, Shein became big because they fixed that problem. But they had to do a lot. They had to have tech. There was an ecosystem where that just-in-time thing. So, when an Indian founder tells me I'm doing just-in-time, I want to say, like, kaise? We don't have, you need that ecosystem also, right?
Yeah.
So, they could do that just-in-time. And then, of course, they had that shipping ability and to talk to a global audience. And therefore, they could also give the price. So, what is that innovation you bought? It could be in any part of the business, any layer of that business. But if you've not got that innovation, I don't think at least a VC will look at it.
Yeah, there are two things that we have done in our business. One is continuous flow of manpower from the backward
That's the
states, and the other one is the
But that's not
technology.
an innovation.
It requires a lot to build that ecosystem so that
That's different. See,
The
that
reach.
may be a bit of a moat for you, but that doesn't take away the service layer. See, you've got to understand productizing versus service. Any business that's heavily heavily service will not. Again, this is the point I'm making. You have to understand, why does a VC invest? A product first company allows it to grow very, very quickly if it works. A service company can never grow fast, no matter what you do. You've solved a problem, but you've not solved it in a way that can transform the industry and gives you so those are the things. So this is good for you. You'll grow your business, but it doesn't make it a VC investable business. But on that note, thank you everyone for joining me on Startup Table. I hope it was useful for everybody on this table. Sure. And I hope it's useful for all the audiences who are going to watch. So please do subscribe to our YouTube channel. You do need to support founders by sitting in the comfort of your home and watching this episode. All you have to do is subscribe. Thank you.